Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 14th of July. Starting off with ADM Energy, where we've got a beautiful looking setup here. It looks like mid-move consolidation either side of the 200-day moving average at 3.9 pence. The target here previously up towards 6 pence on the top of that March trend channel, but I suspect this looks like a situation that could give rather more, perhaps up to something like the line I'm drawing here. So that would be up towards 10 pence, the top of a September rising trend channel. So let's see how the shares pan out. But obviously testing 6 pence would just take the shares back to where they were in the autumn. 10p, rather more exciting. Speaking of exciting, we've got one of the best performers of the last few months, All Active Asset Capital. Here you can see this broadening triangle, which is obviously normally very good news when you can draw that on a chart of a stock or a market. Here we've got the classic sort of ultra bullish formation of a rise, then sideways, sort of step formation, which is continuing. And the view at this stage is, at least while we're above the floor of the broadening triangle, around the 2.8 pence level. The upside here could be up to 7 pence over the next 1 to 2 months for the shares. If you're cautious, obviously, you wait for an end-of-day close above last month's 3.4 intraday peak, but looks like that may be or should be a done deal. A stock which is now part of a very elite group of pharma stocks which haven't gone down in the last few weeks is Hemogenics, with the Eli Lilly announcement yesterday. That broke the converging triangle that we got, or symmetrical triangle that we had at, well, I suppose, roughly at the area of the 200-day moving average at 7 pence. While we're above that, we're very much in bull mode and heading up towards a potential target here, top of an April trend channel at 20 pence, which obviously seems rather ambitious at the moment. The acid test, I suppose, there is that we remain above the initial June peak at 9.25 pence. Let's see how that goes over the next day or two, but above that June peak, 20 pence could be the best case scenario. Otherwise, it's sort of consolidation between 7 and 9 and then higher for the shares. Next situation is one that I missed due to senility a few days ago, image scan, but what it's meant is that we've got a better picture on the charting setup here. Rising trend channel from image scan here from November, top of the channel heading towards 5.25 pence. And that target value, while we hold above yesterday's intraday low at 2.2 pence, which is the top of the gap high that we've had so far this week. Nice to see also we're in the run up to a multiple golden cross between the 20, 30, 200-day moving averages, 50-day moving averages, etc., etc. So that is all looking pretty good. End of day close above that resistance line from November, around 2.7 pence, would be a decent trigger for the longs to go and look at. Now we got a stock which has taken a while to get off the ground over recent weeks. I suppose it's open orphan been rather quiet from the second week of June till basically the second week of July, so a month in the wilderness, let's say. But we're always near to the 50-day line. And we also had that support line there from March as well, currently running around the 11.9 pence level. That came in quite nicely, and we've broken the neckline resistance post-June, which was around the 13 pence level. And while we're above 13 pence, looking for a top of a broadening triangle target as high as 24 pence over the next 1 to 2 months. Very happy to see that finally take off there, because it has been quite a lot of consolidation that we had compared to the other pharma stocks. Next contender is the third part of the holy trinity of rising pharma stocks, soaring pharma stocks today. Tiziana Life Sciences. I don't know whether you saw it, but I did actually cover the US version of the shares last night in the US penny stocks sweep. I had a $14 target there. Perhaps rather more modest here in terms of what the upside here for Tiziana could be over the near term, but the break of that June resistance line there around £1 and the 20-day moving average was the big buy signal, which was covered last month. Situation now is that after dragging its heels for so long, it looks like the shares are actually going to overcompensate with the move to the upside. Initial target, obviously, that peak from March at £1.72, which we've just been nudging with this morning. But after that, looking for the top of the rising trend channel from March as high as £2.60 or even £2.70, and that target really valid while we hold above, certainly while we hold above the 140 to 150 area. So above 140 to 150, up to £2.60 or 70 there. I've been dithering in terms of looking at Union Jack oil, but I think it's certainly proved its mettle in terms of the recent price action, breaking that June resistance line, testing it as a new support around 0.21 pence. While we're above 0.21, certainly looking for a top of February price channel target as high as 0.37 for Union Jack. So pretty healthy stuff there. The only thing missing at the moment really would be for the 200-day line currently at 0.16 to start rising. That would really accelerate the price action on Union Jack. Last stock of the day is Zenega, which bit of a Marmite stock for some if you look at the at Twitter and social media, but we've broken that line of resistance from the end of May, roughly at let's say 6 pence, and while we're above 6 pence, looking for a recovery up to that line of resistance from late September, heading up to the main resistance on the daily chart at 14 pence. If you're cautious on the situation, maybe wait for an end of day close above the 50 and 200-day moving average is currently around the 7.8 pence level, but likely now that we'll hold the low 6 pence area and head up to 14 pence for Zenega. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.